All right, good evening traders, and this video is basically going to be a roadmap to a basic market day and what we do here at Day Trading Radio when we trade prop accounts. We're going to use this as an example of how to trade prop accounts and when we get in the morning. Now, here at Day Trading Radio, we're a community of traders that trade from market open, around 9. A lot of the traders are in the room overnight. But we're going to just talk about the morning session here in the U.S. markets from about 9 o'clock to about 4 o'clock, half an hour of the pre-market, even going into the post-market or about 4:30, 5 o'clock when the futures close. If you do go to daytradingradio.com, you'll typically see my chart on here, the S&P futures chart, the ES 1-minute time frame. And with this chart, we kind of identified levels in the market to trade. The key to being successful in the market is not to be in the market, basically. And what I mean by that in a kind of a funny way, tongue-in-cheek way, is less time you're in the market, less time you're going to lose money. Markets are very hard to trade, and there's certain levels that you want to trade in the market. Now, I don't know how many years experience I have in trading, close to 25, 26. I've narrowed this down to certain levels that I identify as market moving areas, and these are the areas that you really want to concentrate on. Anything else I consider gambling, and it just doesn't give you the odds of a move. Now, odds, we talk about odds, game theory, stuff like that. You know, the markets are not a casino, but they also are not a sure thing, and there is some risk involved on basic news, events, and stuff. But we know how to recognize certain signals in the market, what we like to call divergences, reversals, where the market comes in, moves in one direction, and then knows that we know that it's going to move in another direction. We could really see that by our quad stochastic bands down here, and this is what I use, the quad stochastic bands. For a lot of the new traders, a lot of new listeners on the video, watching this video for the first time, might be new listeners to the site. I kind of direct this video to you guys to kind of give you a roadmap of what we look for each day. All right. So if you're lucky enough to be able to be in front of the markets for a couple hours a day, that's great. This is something that we want to be in front of the market. If you do recognize one of these levels, and we're trading short-term futures, so we're going to make fast profits. This is different from swing trading. This will be considered scalping. And we're trading futures, and we're not trading stocks. That means you don't need a set amount of money or be considered a pattern day trader that you are in stocks. Futures, you could be in and out of multiple times. And in this case, we're actually trading prop accounts, so you're able to actually trade with an evaluation account and basically trade other people's money. So first thing is, you can see on the video, there is 2 good coupons. They close tomorrow. They actually this one, the Apex one, which is a really nice one. Let me bring it up on the screen. They have a 90% coupon right now on the Apex funding, and the 250K account is only $16.70 to start off for the first month. The 90% sale is also can be applied to all accounts. Just use the coupon code DTRAPEX. Now, it's good until tomorrow, meaning the coupon ends tomorrow. It's really a great one, so take advantage of that. I always tell people to have one of these 250K accounts in your pocket, because this is the one you want to trade when you get a super signal. Not to go into everything that we offer here at Day Trading Radio, but a super signal is one of the setups that you really want to take that's based off of multiple time frames. And when you have a super signal, or a high probability zone, and you're going to pretty much get a big move on there, you want to use something that you can make some serious cash, or at least have an opportunity of getting close to qualifying a big account like this. And that's the type of account you want to use. So whenever they have a good sale like this, $16.70 is definitely worth taking. And then trading this, saving this, only for the 5-minute setups, the 5-minute divergences. During the day, we're typically looking at the 1, 3, and 5-minute time frame. The 1 is because we're watching the market minute by minute. If we just looked at the 5, it would probably be a little bit more boring, but the setups would be there. And I'll show you an example of that in a second. All right. All right, so here we get into the morning, and we're trading. Now we're looking for divergences, and the divergence has to be a definite, pure, what I call visual, mathematical divergence, where we have a divergence comes in when you have a low and a lower low on the price, a low and a lower low on the price, and a low and a higher low on the stochastics, just the opposite of the price basically. When we're and what helps with this is also having what we call a quad rotation. So a quad rotation divergence is our number one go-to trade. This is the only trade I recommend people trading. All right, the hardest thing in trading the markets is waiting around for an HPS zone to happen, because, and I say this all the time, you probably get tired of me saying this, it's like walking into a casino with you have a bunch of cash. All you have to do is push a button and you have a shot of actually making money. All right, back to the divergence. Sorry, phone calls always coming in here. Again, the divergence is pretty easy to recognize. It's a visual divergence where we're seeing momentum shift. Now, again, not to go into the whole methodology, and there's enough time for that. You could do all the research you can, all you want on Day Trading Radio. If you remember, we have many videos talking about the strategy and learn the methodology, the HPS methodology of divergence trading. It is the best way of trading. I guarantee it. And I show it to you every day. So all these lines that you see posted here on the chart are lines that we point out during the day, real time. I'll put no line in between before it's time. Sounds like a good coffee commercial. So the first one here, you had that low and that low. That started off the morning here at 9:30. So again, the analogy of walking through the casino with a bunch of money in your pocket, and sitting down at the table and just pushing the button and being in the market that's an option. It's the same thing anywhere. You could choose to go your own route, or you could choose to wait for the setups. And when you see the setups and see them work, it's only you that's going to hold you back. You have to take the setups. They will make you money. All right. I base my whole trading strategy on identifying these setups, and it's very important to, once we identify them, to take them. Identify them is good, but if you're not taking them, that doesn't do you any good. All right. And the other big question is easy enough, and I tell everyone this all the time. Easiest part is getting into a trade. Our trades are going to be great to get into. The hardest part is knowing when to take profits and how much is that setup, and what's the profits potential for the trade. That could be a little bit more difficult. And we use our 60 period here, just kind of overall charts and different time frames to kind of measure that out and kind of run with these things. So even though we do find a 1 minute time frame, we get these short-term entries. The 5 minute time frame really determines how long we're going to be in a trade. So here at 9:30, we had a little buy divergence. We got a nice pop. And like I said, if you can identify a divergence happening and you get in and you get a rotation, most likely you want to take your first profit to move your stop up to break even and let the rest run. All right, so that's a good strategy. Always have multiple contracts. If you trade in the MES or the ES, it'll be the same thing, basically, other than what the contract's going to give you as a reward. The ES is going to be, in this case, ES is $50 a point, where the MES is 1/10 of that, $5. So it's a big difference. But I still like the MES because it's an easier contract to scale into and scale out of with multiple contracts. But I just use the ES as an example. You would take the same trades on the ES as you would on the MES. Oh yeah. Sorry about that. I had the coupon covering my thing. I'm sorry. I have a lot going on here. Thank you for texting me, whoever just texted me. I don't have my chat room up right now. So again, here's the setup, the low, the lower low, the higher low, the move back up. And again, we do this all day long, and we wait. And we wait for the setup. This is just giving us a lot of things, but what we're waiting for now is the opposite of this, or another one of these. I mean, basically, the sell side divergence will be a high right here, and then the market will put in a higher high, but we'll see a little lower high on this. So we recognize that divergence here at 1030. We had a nice sell side divergence right here. With that, you can see the market pull back nicely. And again, you could rotate right back down till we got oversold right on the 50. And because we know we only have 3 real basic setups that we get into the market, it's very easy to know, when to get in and when to get out. Getting out of this setup is on that rotation of the 9-3, the rotation down to the 9-3 here. And it's also on the 50 period moving average, which makes this a condition we call a bull flag. And the bull flag is a nice push off the 20 period moving average and the 50, the move back down. As we move down and we get oversold, the price hits the moving average the same time it hits the 20. The 20 on the 9-3. The 9-3 is the top stochastic oscillator. 14-3 is the one underneath it. 44 is the one underneath that. And the 60-10 is the one underneath that. So that's, again, an area that we like. But the more important thing is the divergence there. So you took that short divergence, you get the move down. You always put your stop in 1 tick above the divergence high. So if the divergence is 2 parts, part 1 is a high, part 2 is a higher high, part 1 is a high, part 2 is a lower high on the sell side divergence, your stop goes in 1 tick above the high, the second high, the higher high. Again, easy enough to define that. You can't mistake it. It's very easy to put in a trailing stop because it's very easy. There's no mistaking where the high is. So everything is set for you. The hard part is, do you take it off here? Do you take it off here? Do you think it's going all the way down? Well, use your stochastic and momentum indicator and understand that it works for a reason. The up and down, the market goes up and down for a reason. And that short-term indicator is just going to keep you sane. You're not going to try to hold into something against the grain. Like, all right, now we're oversold, probably going to get a bounce. Now you could take it off on the 50, reverse it there, just take profits, reverse it, or you're going to hold. And the holding and seeing your profits disappear, going back up, not knowing if it's going to turn back down, we just don't need that. Don't need that stress unless you feel, very strongly that this, maybe the trend is in your favor and you're going to hold it. Most likely you're going to get that push down, move back up. If you got a bad fill here or something, you don't want to give back those profits. And there will always be, remember this, and say this to yourself when you're trading, there will always be another setup down the road. Down the road there'll be another setup. If you miss something, you don't chase it, don't get frustrated. There will always be another good setup. Now, sell side divergences, really nice. Again, little divergences like that, really nice. You have to wait for them. Right now, I'm kind of analyzing the rest of the market. We're looking at a flag here. We're looking at the rotation, looking at the stochastics, understanding that maybe we get a rotation here. We're going to move up off of this if we got oversold. Whenever we have that hash mark down, oversold right at the 20, and we're holding the 20 or 50, we usually get a pop out of that. Nothing really here except a trend line starting to develop. I put that trend line in when these 2 pivots came in, and I extended those all the way down, and I used this one and eventually got another one, and we made this long channel. Here we have another little divergence. I remember calling this one. Now, when we say we call them, for those out there who are not on the Futures Trade Alert Network here as a member of Day Trading Radio, you get the Futures Trade Alert Network. That's an app you download on your phone, and I'll call out the super signals during the day. You won't hear constant commentary like we're hanging out and answering questions and looking at stocks and stuff. You will only get the HPS zones announced on the Futures Traders Alert Network, which is, you download that on your phone. Now, it comes with all the memberships of Day Trading Radio. If you're not a member of Day Trading Radio, you could go to patreon.com/day trading radio, and you could actually get the service there, and it's really reasonable. It's only $20 a month if you want to do that, but it comes for free for all members at Day Trading Radio, along with, of course, all the education, the great stream, the tradeometer, the Rockbot channel, and everything else. But you have the links will be in the video description if you want to follow up on that, and a description on where it is. If you go to benefits.daytradingradio.com/trade alerts, there'll be a page there, but I'll link that to the bottom of the video here. Market comes down, very organized. You see, in and out, in and out. We actually had a little divergence here. There was a low and a lower low, and we had a low and a higher low. And I saw that, and we got a little pop, and we see how fast we got overbought. You should have taken that off. Even it gives you 1 or 2 points, and maybe you're thinking, well, I want to get 3 points on this. And you get in here, and you don't have the best entry. You're in at 30. You're in at 32. All right, you're in at, say, I recognize this, but you don't get in until like 32, 53.32. Market kind of moves up here. We're up to about 33. You only have a point. You're like, I want to get 8 ticks on this. I want to get 2 points on this. I want to hold on to it and try to get it. But that's not it. If this gets overbought, the 9.3 gets overbought, and the trend has been down, most likely it's going to continue to down. And every little bounce is going to be sold into. Every little bounce is going to be sold into. So even though you do get a small little divergence there, maybe you get a point, maybe you get a half a point, maybe you get 3 points. Whatever you get on that rotation, you need to take, because that is money. That is money. That's found money. That's a $20 bill on the ground. You pick it up all the time. Don't walk by it. If it, the divergence is going to give you something. The overall trend is going to determine, how much you're going to get. Where's this basically going to go? And you can see the overall trend, this little channel down. Now we had another divergence right here. We had a low, and that spike down lower low right there. It was really tricky. Came down, and we kind of pushed that. And if you put your stop underneath that, it would have been fine. And that kind of defined the breakout. That was also a bigger pivot here, and I was pointing out this candle. It was very similar to this one over here, but this candle, this spike down, it was usually we see these news items that come out from a Fed governor, and this was one of the Fed presidents that made some comments. You can see the little spike in volume, and then that's usually an opportunity. And what happened is we did a reverse and move all the way up. Now there is opportunity. There will be times when you might see a divergence, and that wasn't really a divergence. That wasn't one here. Here we are. Most of the time, you're not going to see them not work. They're all going to work. I was looking at one here, but I don't know if we called that or not, and I don't see it here. So let's pass on that. That wasn't a divergence. But here, you see that high, and you see that lower high, right? Again, we're really looking at making sure that lower high is going to be underneath that 80 line, and you had that small little double top area up here, and that fast little rotation. And again, even though this was a nice little upward trend line, this is kind of a good example I went over today of how head and shoulder formations form, and what a head and shoulder is truly, what it truly is. Head and shoulders is a reversal pattern that is a channel breakdown. So you make your move up, higher highs and higher lows. You're going to have a higher high, which is going to be a shoulder. You're going to be a higher high, which is going to be a head. You're going to have a breakdown, and then you're going to have a bounce, and that's going to be your right shoulder. So you have a head, a left shoulder, right shoulder, left shoulder, head, right shoulder on the bounce, breakdown, and that rotation. And when you get a breakdown of a channel, and you get the rotation back up, and you get rotation and brings it back up to the 80 mark, that is where you want to initiate your short. Always want to initiate your short with the 9.3 on your side, meaning overbought and starting to turn back over. Because right now the worst case scenario is it pops higher, and that gives you a very easy stop out, 2 points. All these trades should be very tight in their stops, and most likely because you're getting that bounce and you had the channel breakdown, most likely this is going to just roll over and continue to kind of drift down. We call this live, and I kind of walked you through the head and shoulders as it was happening and explained it. And you can see it did end up being a change of channel, a change of trend, and a new channel being made. Now, not much there. We're waiting for the markets coming back down. Not much here. Don't see anything here. Nothing there. Here we had maybe a little. Oh, that was a nice divergence right there. You see it? You see the low here? You see the higher low right there? Now these are kind of lip divergence. You have a low and a little candlestick low there. Little pullback, holding the 20. It's usually a pretty good setup there. This is also kind of embedded to the upside, which is also very good for a flag. So you have a flag divergence. So the flag is one thing, because the flag is the pullback to the 20-50 period moving average, the rotation here, and the embedded stochastic here. But if you have the rotation and a divergence and a flag, that's even better. And that's a super signal right there. So that's a flag. It had to move up. We had the rotation back to the 50. We got oversold here, but then we had that divergence with a higher low. This was still embedded here. Divergence and a little pullback breaks this out. That's a tough one to see. Not everyone's going to see some of these. You got to have, you will start to recognize these over time. And that's it. But that was the 1 minute time frame. But the key is, if we looked at this and we said, how many trades should you have taken into this? Well, obviously the first one out of the gate here was a real good divergence. But 9:30 becomes volatile. You might have missed that one. We had a nice little divergence here. 10:40, I always liked that one. That looked great. Excellent little divergence there. There was a good divergence right here, which was a doable divergence. And then, let's see where else we had one. We had a little one here. And again, the rotations were important. Now, the one thing I want to show you is, that's good, trading the MES. Now we have one of those big accounts. When do you use that big account? Well, the 5 minute divergence or the 3 minute divergence are bigger time frames. Look at this. I want to check this out today. And we have so many people on our Futures Trade Alert Net where you guys talk to me. If you're attached to me on my contact, and if we see something on different time frames, you could let me know, which I get a lot of people do. So we never really miss a setup. So here's the SPY today. And boy, what a pretty thing. Look at this. At 9:30, there was a beautiful divergence. It was a lower low and a higher low on the stochastics on the 9.3. Very easy to spot there, right here. Circle that out. We announced it right there, right at the open. It went all the way up to about 11 o'clock, 10:15. And look at this one. We had this nice higher high and a lower high. And look at the nice move down. And then you had a higher high, a lower high on the price, a higher high on the stochastics here. This was kind of a sloppy setup, but we were able to say, yes, that was definitely a good divergence. And it is. It's not hard to qualify these because they have to have two things going on. You have to have the low, the lower low, the low, the higher low. Once you do that, you put your stop in. And then that's going to determine if it's a winner or if it's a loser, because all you have to do is put your stop in one tick below that candle low. As long as this is higher, what do you have to lose? Nothing. And if you're doing the prop accounts, you have nothing to lose, basically. So perfect setup, perfect setup, perfect setup. Kind of had a little flag here, and that was about it. There was really 3 5-minute divergences here today. Three good quality 5-minute divergences that define the biggest moves of the day. And you could see them yourself. The lower low, the higher low, the lower low, lower on the price, and the higher low on the stochastic. 3, 1, 2, 3. And the day wasn't even that impressive. I mean, not until the end of the day we kind of rallied out of this. And that was just kind of a rotation back down to around little before 3 o'clock. That was probably a quad rotation. The 5-minute was just getting oversold here at 3 o'clock and starting to rotate back up. So I like to run back and forth, look at that and say 3 o'clock, what's going on here? Well, at 3:10, you had the divergence. So you had the divergence right there with this candle. Stop goes underneath that candle, right? Stop goes underneath that big candle, comes down, you start to move back up. We see it on the 5-minute time frame. It's go time. And we got a nice move up. The worst case scenario is that low doesn't hold. It most likely will. And you just have to almost get up out of the chair, leave your stop in there, and walk around and don't get involved in this and let it work its magic. Let it work its magic. You might have 1, 2, 3, 4 setups a day, but you gotta wait for them. The copy trades are based off of these 5-minute divergences. All right, I'm really trying to be focused on those. Give you the bigger moves. Give you a good 5-minute divergence. This was a beautiful one, 11:30. The 5-minute setup was there. Let's scroll back here. Can't really even see it here. There was not much else going here other than this nice little tip here, but you could definitely see it on the 5-minute time frame. I want to zoom out here a little. Now we can see these little lines. There's divergence, divergence, peak here, divergence, little peak, divergence, possible divergence. I think it was back here. Yep. Just that is the key here. Make it not going to make it too complicated. The key is identifying these reversal areas, the momentum shifts, taking the positions, placing your stop, and letting it go. All right. Don't overtrade. Each one of these setups is, ideal with a trailing stop to go, or a hard stop to go right under the divergence low or the divergence high, depending on the short or long. And multiple contracts. Take your first group of profits on the first rotation. Understand the overall trend in the markets. If it's trending very strong in one direction, if you get a divergence going against the trend, you should take it off on the first rotation of the 9-3. Be a little bit more aggressive on protecting those profits. Very simple rules, right? That's what you have to do. Surround yourself with a set of rules that's not going to get you too involved in the markets. The more time you're in the market, the more you're going to get chopped up. Divergences, especially the little pullback, holding the 20, big divergence. Step in, place your stop, go to work. All right, and again, the beauty of it is you could do this on every different. So that was the SPY. Let's take a fast look at the Qs. Now you could do this with options too. We have a lot of traders that trade options, and you could scalp the options by the same setups. Now the Qs here on the 5-minute, not seeing anything. So don't see a divergence really here that we had on the S&P. Nothing really there. On the 3-minute time frame, I'm getting a lot, a little bit, maybe a little bit better. Not too much. There was something back here. Again, that 9:30, 10 o'clock time frames, that little dip back down, that high-low rotation here, that was the low of the day, and that was probably the best setup right there. There's a little divergence back here. But, again, when the setups come, you got to be ready. Make sure you get get the alert set up on your phone, because these are how they're going to get delivered real time using that Voxer. Look for the link in the video. If you haven't set up, I'll show you the directions of how to get that set up for you. That's a little review of today's markets and the importance of waiting for your trade. All right, the trades will be there. Wait for your divergence. Take the divergence, place your stop, and don't be in the market too much. Hope you enjoyed that. Don't forget the coupon. There's a 90% coupon in Bullinox, a DTR 90, and the other one was, which I think is a real good one, the Apex 90% off. That ends tomorrow. 250K account that you should have in your pocket for these 5-minute divergences, because those 5-minute divergences are going to give you big moves. And you can go in with 10, 15 contracts on a good divergence with a tight stop and give that shot. For 1670, why wouldn't you? But wait for that 5-minute time frame. And they're going to be setting up. There's going to be a few of them a week. You don't have to be in the markets every single day, every single minute. Very important to realize that. All right, that's it. I'm signing off. Day Trader Rockstar. Head over to daytradingradio.com if you want to see these trades live every day. Daytradingradio.com. We've been trading live on the air since 2007. That's right, 2007. Have a nice one.